And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my futures traders family. It's time for the market forecast, Thursday, September the 22nd. It's the autumnal equinox. And all of a sudden in one day, we went from 95 degrees outside here to about 60 right now. The autumnal equinox means the Earth is directly over the equator on its way south. We are coming into winter in the northern hemisphere. Not looking forward to it personally. It seems every year it hurts a little bit more when it starts to get really cold outside. As always, we're focusing on the forecast here on context, risk management, and patience. We had a early economic release this morning in the jobless claims. Kind of mixed numbers there. The last week's jobless claims came in at 213. The initial came in at 213,000. They were looking for 218,000 this time. It came out at 213,000, but last week's was adjusted down to 208,000, which means there's a little bit of an increase in initial jobless claims. The good drop in continuing jobless claims, which is nowhere near as impactful. We had 1,403,000, which was adjusted to 1,401,000. We were looking for 1,400,000, and it came out 1,379,000. So considerably fewer continuing jobless claims. Whether they found jobs or have just given up, we don't know. We're still waiting for 9 o'clock Central this morning, the leading indicators, or as we used to call it on the trading floor, the misleading indicators. I got a dog over here moosing me to say hi. Hi, Lacey. You can see her little snoot. And natural gas due out at 9:30. So as far as other things that we're seeing in the news this morning, many global central banks have followed the FOMC's lead yesterday in raising key interest rates. That includes Switzerland, Norway, Indonesia, the Philippines, and England. U.S. stocks are set to open sharply steady this morning in early trade. Policy expectations of more rate hikes to come. Crude prices remain somewhat stable while demand continues to be in question as far as crude oil is concerned. What is your deal? You want to come say hi? Hi, Lacey. This is Lacey. She's my work buddy. She's my work buddy. I know. I love you too. I do. You're a pain, but I love you. All right, can you get down now so I can finish? Okay, thank you. Okay. Very needy this morning. VIX this morning down slightly at 27.56. The dollar index at another 52-week high this morning. 110.72, and the yield on the 10-year hovering just above that 3.5 level. Percentage-wise, as always, if you do like what you see, hit the lucky like button. Share, comment, question, feedback, and heckling and love are always welcome here on the Market Forecast. Make sure you subscribe to our YouTube channel when we do, so you get notifications when we do go live. Happy Thursday, everyone. Happy first day of fall. Maybe if you're in South America, it's the first day of spring. But we up here in the Northern Hemisphere are facing the cold coming at us. I've already got my my quarter zip on because it's freezing in the house today. We're going to have to see how the markets are freezing for the session today. All right. Jimmy Decker, first in the room. You win the prize today, Jimmy. The Rooster, good morning. Tachyon Shaw Trader, Scott saw and he conquered. Dark Evan Jules, my brother Rick, love you. Brody, Dario, good morning. Sonny, Dead Letter Opener, good morning. Glitter Sandwich, tried to trade during J. Powell's speech, but got my face ripped clean off. Not going to do that again. Yeah, I succeeded in my plan yesterday, and I came out even because I didn't do anything. Been around long enough to know that I find it more of a crapshoot than anything else. And over the years, I've been dead even, so I don't even bother these days. Every day is a new day. There's going to be opportunities today. There were opportunities the day before yesterday as well. We'll just seek out those opportunities. I think we all have to do that at some point just to see if we can get it figured out, right, Glitter Sandwich? It's very difficult to trade days like yesterday after those important information things knock the market around. Serenity Trader, good morning. Dead Letter Opener. Rick, Dead Letter Opener is asking if you have any insights on crude oil. John, good morning. JST Wave, Dimitar. Dead Letter Opener was very patient holding through the bounce, but still took profits a little early. What a flush. Well, it's okay. You took profits. That's a good thing. You held 5 micros through the whole fiasco, and that is a little bit crazy. You got a lot of risk on there. Terry King, good morning. Caprice, I'm not sure I've seen your name here before. Thanks for coming and saying good morning. Haggle Matters, good morning. Marcelo, 3 Lions. Theo, good morning. Trading Research, Rob T. Edward, Orion, good morning. Orion, hopefully you were a disciplined trader yesterday. Hey, Sarah Hall, good morning. Prayers and love to you as well. Nicholas, good morning. British rates made no volatility. That surprises. Artem commenting on that. We have Patrick, we have Stephen, we have Eric, we have Dan Trader, good morning. Joe, good morning. Does your weekly kickoff level have any relevance once penetrated? Well, yeah, once it's penetrated to the downside, a return to it can provide some degree of resistance. We're gonna maybe see that today in the charts. Scarlet Arachnid, yeah, she's a sweet girl, isn't she? No, she's not missing any meals, that's for sure. Scarlet Arachnid, DMJ, Koss, good to see you. Mason, rain in Colorado, hurrah. Daniel, Casey, Ron Merlot, good to see you. Anissa, Lacey, I gotta be able to reach the mouse. She's moose in my hand. I think she's got to go, but she's going to have to wait. All right, Anissa. Nicholas, all right, let's take a look at the charts here and take a look at what we're looking at this morning. We did not see, as far as I can tell, our family member with the great ideas and thoughts for the day yet. Wondering where he is. We got Vince coming up with one. Saw this quote and had to share it. Failure isn't the opposite of success. It's part of success. 100%. 100%. Success is never a straight line, is it? Thanks for putting that up, Vince. Very good quote. All right, let's take a look and see what we are seeing in the charts. We've got Make Hogue Money today, so we're going to try and be ready here at about 8:15 to finish the forecast so we can get into Make Hogue Money. But let's take a look at what we're seeing. And we've got late spikes, ladies and gentlemen. Late spikes in the equities might offer some interesting opportunities for us on the open. Here's the S&Ps. So, weekly kickoff low is 38.51. We don't really see it here, but eventually when we did break it out and hold down below it, the late spike really started at the weekly kickoff low once we had found some acceptance down there. So overall, not great volume yesterday for the push to the downside. I didn't think the volume was all that tremendous. Probably because we kind of backloaded all the volume to after 1:30 or 1 o'clock. Open interest, we did add 23,000 in open interest. So this break to the downside, this breakout does have some teeth to it. This is not a hollow break. There's money coming into the short side here yesterday. It indicates some new sellers. Weekly kickoff low has been broken. We're going to be looking or monitoring for continuation to the downside. We've got downside structure already off these highs. This would be a continuation of that downside structure. If there, are we waiting for bad news? Are we going to fall into a kind of a hangover day? That's entirely possible. We're just going to have to see what the open looks like with regard to the late spike. And speaking of the late spike, all right, so here's our range-bound activity yesterday. Everything comes out. Everything goes crazy. We go bipolar as far as directional activity is concerned. Take a look at how the candle bodies, how much information is given us near or in the area of the weekly kickoff low. We looked down below it. We closed pretty close to it. We looked higher. We came back down. We closed again really close to it. Then we start our late spike to the downside. Now, the base of the late spike starts here. The base of the late spike is 32.75. But where does the late spike begin? For you were asking about Joe, you were asking about whether the weekly kickoff levels have any relevance once penetrated. Well, look where the late spike began, right at the weekly kickoff level here. We're going to go a little bit higher on that because it was 38.51. The high on this bar, 38.51 quarter. One tick above it, the market went, and then we started our late spike to the downside. So what's a late spike? A late spike is a late move in the market that does not have time to be accepted through time. The late spike is this big drive to the downside. We closed right at the bottom of it. Settlement is 38.06 quarter. We are going to be opening in the late spike. Now, there's three ways that the late spike can provide us with good opportunity. Opening above the late spike, rejection of lower pricing. Opening within the late spike, a good probability of acceptance of lower pricing. Opening below the late spike down here would be a higher probability of acceptance of lower pricing. My dream level today for the S&Ps would be for us to come back up here, test either the base of the late spike or where the late spike began, which is right at weekly kickoff low, which is right at value low from yesterday, which is right at last week's low. There's a lot of information here. I'm betting that there's some pretty big fish up here. Now, we're going to be looking at the possibility of rejection of lower pricing at this level and a continuation to the upside, or a failure above that level and a continuation to the downside. We don't really have any overnight inventory. I'm saying the overnight inventory is largely moot because we've looked lower, we've looked higher, we've looked lower, we're looking back higher. I'm not going to be depending on overnight inventory for any opportunities. The fact that we're opening in the late spike may offer us opportunities earlier in the session for good trade locations. Direction is always unknown, and as we always say here on the Market Forecast, ACH, anything can happen. Anything can happen. Let's take a look at crude oil now. We're getting up to pretty close to the opening range, but I'm not really thinking it's going to be anything spectacular for us today. Crude oil, we closed below the weekly kickoff low barely yesterday. We had some pretty good volume increasing. You can see over time it's naturally increasing because rollover is now over. We added 7,300 in open interest on this push to the downside, and it seems to be we may have trapped some shorts down there. We got the market holding support now in the overnight session at weekly kickoff low and seemingly looking the opposite direction. The question is, demand is still really in question with inflation and world economies not doing so well, how much crude oil are we really going to be demanding? That's really kind of the question. Inflation, higher rates, all of these things weighing on crude oil prices. So here's our push to the downside, adding 7,300 in open interest, pretty substantial move as far as open interest is concerned, bringing us to close below weekly kickoff low. But are we holding down there? Do we see time being spent down there? We don't. The market has rejected those prices. It's now opened. It's in the range from yesterday, above value from yesterday. It says to me to stay a little bit patient. We do have some overnight inventory to the long side here. We've opened here. We're now trading here. But if we've trapped a whole bunch of shorts down here, a lot of these overnight weaker hands longs are going to continue to get paid if we keep squeezing these shorts that we think got into the market yesterday. This is a B-shaped profile, which indicates long liquidation. But with the open interest, we did more than long liquidation. We got some folks short down here. It looks as though our opening range is the low of the session. Here's that first minute. The low of it, 84.20, the high of it, 84.48. So a 28 tick opening range. Not too big to take. You can manage risk if you're already in it. Of course, we're late to the party now. But the opening range so far is the low of the session. And we think that we may have trapped some shorts yesterday. So those shorts may be the first ones to continue to push price higher. Nasdaq. Alrighty. Nasdaq. All right. Nasdaq is naturally at a lower level than the S&Ps. S&Ps, we're working at 20% off the all-time highs. This is the 30% off the all-time highs. We've already accepted last week below this level here from July 19th. I'm not real happy that the market has accepted any time down below that. So now we've got weekly kickoff. We've closed below weekly kickoff in the NASDAQ. We added 7,400 in open interest on higher volume. The downside auction actually looks more healthy in the NASDAQ than it does in the S&Ps. We've broken that weekly kickoff low. Are we waiting for more bad news? Are we going to digest? Are we going to go into a hangover type day? We're in a deeper pullback than the S&Ps in the overnight session. We traded back above the weekly kickoff low. There's still lots of information right here. Take a look at the 30. So here's our drive to the downside. Here's settlement. We've got weekly kickoff and last week's low, relatively important, close together. We've pulled further back above weekly kickoff high in the NASDAQ than we did in the S&Ps. We don't really, I think, have any overnight inventory, and we're opening right at settlement. I don't see that there's the great opportunity at weekly kickoff low here. I'm looking more towards our base of the late spike, which is 11,763, and where it started was up here at 100 points higher at 11,862. So there's a pretty wide range of area. So we're going to be kind of looking at what's going to happen with this late spike. Where the market is right now and the direction it's attempting to go, it might indicate that we may open with a gap below the below the low of the late spike, which is, again, the highest probability of acceptance of lower pricing. Doesn't tell us where to get in, just lets us know we should probably be looking for opportunities for shorts, even if we were to open inside in the late spike. It's still a probability that the market is going to continue lower. In the Nasdaq, if we open with a gap and can't close that gap, we're in trouble. Gold. Gold has really been more of a spectator than a speculator in this last week of trade. Still in range, still in balance. Day 6, lost 3,000 in open interest yesterday. Where are the buyers? Where is the flight to quality here? I'm going to be focusing on the extremes of the current balance. Now, recently, we've just tested up to 1693.50. I'm calling 1694 the upper extreme of balance, 1661 the lower extreme of balance. Take a look at this on the 30-minute chart. The low of balance, the high of balance. Just took a look up to it. What I'm looking to do is fade the extremes of balance until something changes, until there's an acceptance outside of balance, and perhaps a move away from balance would be the thing that I would look to do. We just got a really good opportunity up near the upper extreme of this area of balance. You know, this isn't set in stone, 1694. It's a zone. We got into the zone. Looks like we're rejecting that zone right now. So I'm going to have to try and stay patient. Everything in the middle is random short time frame traders. You may find short time frame levels that will work for you for a period of time, but the most important levels are the extremes of this current area of balance, because anything in the middle here is speculation, spectators. It's not good information. Take a look at the euro. Finally, we get some action in the euro. And we get some continuation. We get some acceptance below weekly kickoff low. What I'm not all that excited about is we only added 1,100 in open interest yesterday. We had some long liquidation, I'm sure of it. That probably took some out. And we did bring in some new business, some new sellers on that move to the downside, but it doesn't really seem that impressive to me. Volume was good. Open interest just okay. Where's the 30? Here it is. So we dragged along that bottom for a long time. Broke out below it yesterday in the overnight session 2 nights ago and continued to push to the downside. Is it doing a good job? It seems to in regular trading hours. Do we have any overnight inventory? Not really. Not really. We're central in range. We're bordering on value. I'm going to try and stay patient in this market. I would love to get a pullback, maybe to check the high from yesterday. There's a lot of information for us up here. Weekly kickoff low, last week's low. There's a naked point of control that we ran through last night or night before last and didn't check in overnight in regular trading hours. So there's some visuals up here that I would like to have the opportunity to trade against. But right now we're just center of the range from yesterday in value. Be patient. Better trade locations are likely to come as the day goes on. Look at this move. It's almost like it was cut out and destined to happen. It's so organized. It bothers me. Anyways, weekly kickoff low. Back to it yesterday, looking like we're going to see some continuation. Yesterday, on higher volume, we actually lost open interest. I'm thinking if we lost open interest yesterday, there was an opportunity for some longs holding a lot of money to kind of cover up some of that, to take some of that. What's it look like on the 30? Weekly kickoff. Spike late in the day. That is in essence a late spike. Settlement was right at weekly kickoff low. We're opening below the base of the late spike. This market is rejecting higher pricing. I'm looking for opportunities to sell strength. And we'll take a quick look at the natural gas, which, by the way, volume's about even today between the October and November contract. I left this on the October contract. Tomorrow morning for the forecast, we will surely be looking at the November contract. We've got rollover range going on here. We're in the teeth of the rollover right now. We do have the EIA natural gas stocks at 9:30 that may change things a little bit. We're kind of looking at the weekly kickoff low now as pivotal as perhaps the neckline of this possible head and shoulders. So weekly kickoff low is going to be looking relatively pivotal for me. Opening overnight inventory, no. Outside of value, no. Any reason to be in a big hurry to get into anything here? No. Again, better trade locations are likely to come as the day goes on when we open inside range and inside value. JD scalping a few natural gas contracts this morning. Be careful. Be careful. Are we seeing crude rip, you say? Oh, yes, we are. So our opening range, pretty decent opportunity for us to the upside. Watch that weekly kickoff high. That's actually not. That's a trend line. We're pretty far from weekly kickoff high here. Here's the low. Somewhat range bound. And this trend line kind of kind of looking at the upper extreme of the area of balance that we're currently in. This might be an interesting spot for us. Thanks for pointing that out for us. Yeah. Yep. We know that we had a few European countries, Switzerland, Norway, Indonesia, the Philippines, not necessarily European, but England also raised rates yesterday. But we did see the dollar put in a new 52-week high in the overnight. It's come off considerably off of that now, but yeah, we're about a buck off. Got a pop in the metals also. Yeah, we were just looking at that in gold. We got up to the upper extreme of the area of balance that we've been stuck in. All right, we're going to be focusing on the E-mini S&Ps for Make Hogue Money. Looking forward to seeing you all there. If you're going to be in the Zoom meeting, you will have the opportunity to chime in and vote. Looking for a couple of folks that want to talk and discuss their trades, of course, as usual. And we'll see if we can make money. Now, Tuesday, we had a couple of losses, if I remember, and I took a trade after Make Hogue Money and made all that back plus a few shekels. So I did a little bit of contribution to the account. Let's see what we can do today. You don't have to be in the Zoom meeting. Of course, you can see it on the YouTube channel. You just won't have the opportunity to vote. We do keep an eye on the chat room in both Zoom and YouTube, so we'll try and keep the conversation going and have a good session today and Make Hogue Money where you get to make me money, and I'll look forward to seeing you there. If I don't see you, trade well today. Let's all take our deep breath. Reminding myself, stay humble, grateful, and creative in my trading today. We'll see you at Make Hogue Money. If not, it's going to be it for the day for me. We're going to have the podcast today at 3 o'clock with Dan and Jack, and then I'll be back tomorrow morning with you for the market forecast, and then it'll be the weekend, so we'll be in good shape. Trade well, everybody, today. Have a wonderful session.